What will happen to Australia and Australian housing in the next 10 to 20 years? In this episode, I'll be looking at a demographic view of what will go on. 7 charts I've taken from Bernard Sol, all the credit goes to him, for Commonwealth Bank private banking clients, which I am. So I have access to these charts. I've plucked the best 7 and I'm sharing it here with you all. It's not really that well known, and so you guys are probably the first outside of that private banking community to see them. If you're interested in an inside scoop as to what the Australian market will do over the next 10 to 20 years, then stick around. My name's PK and I help people build passive income through Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. In this channel, we talk about property, the economy, and financial happiness. Smash the subscribe button, hit the like button. Let's go. Now, like I said, all the credit goes to Bernard Sol, who's probably the preeminent demographer in Australia. So really good intel. Look at this first one. Immigration amplifies housing demand in gateway cities. Basically what this is showing is in 1954 versus 2021 and 2040 projection, the population of the 20 biggest cities in Australia. So unsurprisingly, it was Sydney, number 1, Melbourne, Brisbane, Adelaide, Perth in 1954. Newcastle, Hobart, Wollongong, Geelong and Launceston came a very close in the top 10. Now, it's very interesting, like since that time, you would have thought, hey, Sydney's the biggest capital city, its house prices grow the most. Actually, since that time, Launceston, which is down at number 10, with a population of only 49,000, that has grown way more in terms of property price growth than Sydney. I've done other videos where I've showed that chart and how it's basically kept up with Sydney, if not a little bit tipped it. So what does that tell us? It shows that it's not just the biggest cities that grow the most. But nonetheless, you can cast your eyes down and see what the other big cities are. You might actually find that those areas that you thought were actually kind of little rural towns are actually one of the biggest places in Australia, even in 2021. Like, who would have thought Cairns was number 14? Who would have thought Townsville was number 13, right? Like, we don't think these things, but this is what the data says. Now, going forward, which is the most important and interesting thing, Sydney is projected to grow, of course, from 4.26 million to 6.56 million. Melbourne is looking to overtake it, and everyone talks about, hey, look, we shouldn't invest in Melbourne, it's going to become the biggest city, etc., etc. I've already proven that just because it's a big city doesn't mean it grows the most in terms of house prices, but what does reflect house price growth, or what does have a causation, is the proportion by which population grows. To give you an analogy, if you drop a rock into a big ocean, it obviously has an impact on the volume of that ocean or the volume of that water body, but it's kind of insignificant. You take that same little rock and you drop it into a bathtub, like it actually has an impact, right? You can see the ripples, you can see the water level going up. So what does that mean? It means that the same population growth in a big city has less of an impact on house prices than the same population growth on a smaller city. What we're looking for is percentage rise in population. And where you're seeing that the most, places like Gold Coast. Okay, Gold Coast population growth is expected to be 37 or 38% over the next 19 or so years, whereas Sydney's is only expected to be 25%. So tell me, where should you put your housing money, housing bets right now? But nonetheless, obviously over the long term, population is what drives demand for housing. And we can see that in the top 20 locations across Australia in 2021, all of them are expected to increase a lot in the next 19 years, some less so than others. For example, Launceston is not that crash hot. So this is something you need to be aware of when choosing the right location to buy. Let's dive a bit deeper. Now, this is a really interesting one. It shows the 3 generational peaks of Australia's post-pandemic world. So this is up-to-date population data. It's not like pre-pandemic and being reused for some analysis right now. What's showing is that in 2023, the population of Australia is 26.7 million. The expected population in 2032 will be 29.9 million. The change is 3 million. Okay, so demand is going up. There'll be more houses required. Everyone knows that building and supply is just not keeping up. House prices obviously systemically are going to rise. But what this is more interestingly showing is that in 10 years' time, in 2032, what will be the biggest age brackets by distribution? And so what it's showing is that the biggest age bracket, the most people in Australia will be around 22 years of age. That's the first sort of camel's hump, so to speak. And now obviously these people require apartment living. Okay, a lot of these are incoming students. That is the lion's share of why this is the biggest or tallest hump of the camel, so to speak. So there needs to be built more and more student accommodation. Now, we know that student accommodation can be transient, can be easily impacted. We know apartments can lose value very easily because there is unlimited supply in the air, in the sky. You can build up, 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 up. There is unlimited zoning that will allow you to build more and more stories. Therefore, there's no scarcity in that real estate. I'm trying to put a real estate investors, property investors hat on here. The most important thing that I want to share in this is the millennial families, okay? So the second tallest hump for the camel is those that are millennials, but in 10 years' time, the average age will be 47. These people right now are 37, okay? So they're like first home buyers, they're probably, I don't know, they're like just entering the property market, or maybe they're still renting. Of course, that's just a generalization, but in 10 years' time, they will well and truly be owning their first home. And now there's a famous saying that the property that you buy in your 40s is the most expensive property that you will ever buy. And this is going to be even more the case in Australia in 10 years' time. So think about, where will millennials, okay, that have now grown up in 10 years' time, average age of 47, they'll have young kids by that time, very prosperous in their double income careers. Where will they want to live? Now, of course, capital city or not capital city, that doesn't matter because millennials are all over regional Australia as well, but they will need that full house. They're not going to be requiring apartments. They'll need 3-4 bedroom with 1 or 2 children, maybe more, a little bit of a back, we'll get to that. But that is the kind of property that you should be investing in now, because that is what will be in most demand, and the most prosperous people will be spending the most money on that type of dwelling in 10 years' time. So think about what demand will be in 10 years' time and buy a property accordingly now. That is how to make money. And see, it's not the tallest hump of the camel, but it's definitely the widest. The elderly, okay? We definitely have a lot of people becoming more and more older. The baby boomers, the first wave of the baby boomers will be on average 86 years of age. There is a lot of money to be made in aged care. Now, I don't invest in any aged care. I can't recommend you do that. I've done videos on like SDA, NDIS and things like that, but never retirement homes or anything like that. But if you can figure out a way to make money in that right now, you'll do very well in 10 years' time. Now, this next chart, I want to talk about a very interesting concept called inequality. It's not a fun thing to talk about. I think it's necessary to talk about it. So all the way up to 1966, throughout World War I, during the Great Depression of the late 20s and early 30s, during World War II, all the way up to 1966, there were more and more people in Australia owning their homes. So peak ownership was achieved in 1966, okay? That just means the number of people owning versus renting. That means the country was getting prosperous, not just for some, but for the average or for the majority of people. Those were golden years. Since that time, it took a massive plunge right here, and then it started to go up a little bit. But since sort of the early 90s, late 80s, home ownership has been on the steady decline. Now, of course, in the last 1 or 2 years, or rather 5 years, home ownership has been slightly experiencing an uptick. But was that because of lowering and low interest rates? You can make up your mind. but the overall trend in the last, let's say, 50 years is quite evident downwards. And I think this is because of inequality. Now, no longer does the social, perhaps political, economic framework and structure in Australia support the average middle class person. It's now supporting the people at both ends of the spectrum, not the majority in the middle. And so therefore you have rising inequality. You have the government taking more and more care of people who really need it. They're obviously allowing the well-to-do to prosper through a meritocratic system, through capitalist system. But what that means is that the middle class is close to evaporating, and therefore more and more renters are having to be so, and therefore home ownership is reducing. So I don't have the answers, but the question back to you guys who are watching, which side of the equation do you want to be on? This trend is probably going to continue as interest rates rise or stay at these elevated levels. Do you want to be on the side that perpetually is stuck in the 9 to 5 and renting? And I don't mean rent vesting here, but just renting. Or do you want to be on the side that is actually prospering? You can't have both in this postmodern capitalistic society. The middle class is not being served. And so what kind of home should you buy? That will serve people now and in the future. From a democratic perspective, how will you maximize your opportunity for capital growth? Well, work from home, WFH, is likely to retain a hybrid version. Now, 1996, 2001, 2006, 2011, 2016, work from home was kind of averaging at around, let's say, 5%. With COVID, work from home, it elevated, it spiked, it jumped to 21%. In fact, in Melbourne, it was at 39%. In Sydney, it was 29%. Nationally, it was 21%. Bernard Salt reckons that the long-term average won't quite remain this high as a lot of companies start to recall their workers back into the office, but it will be at around 15%, okay, in 2026, which means a decent 10 percentage point increase on the long-term average. What does that mean for us property investors? It means that we don't want to buy apartments. We want to buy homes that have a Zoom room, have spaciousness, have enough bedrooms and office, enough space so that the mum and dad, so to speak, can both work from home or at least have the ability to do that once or twice a week. The kids have the ability to do that as they go through high school. They'll need to also utilize their computers and technology much, much more. So we need space, although household sizes are decreasing, the amount of space that those people require is increasing. And that's a very important intel or insight for property investors to cater and find and buy the right type of dwelling that people will want in the future. Speaking of in the future, let me demonstrate once again from Bernard why land matters. Okay, so back in 1960, around here, okay, you'd have 1,000 square meter block, a big block of land. Majority of it would just be land, like a backyard to play in. You'd have one of these old school clothing lines that go around in a circle, okay, and you'd have like the living room at the front, and when guests come, they don't really see any bedrooms. They don't see any of your like kitchen. All they stay is in the entertaining or in the living room at the front. Now, fast forward to today, what you have is people entering into the front, and actually all the bedrooms are at the front. You actually take them all through your house to the alfresco at the back or the kitchen entertaining patio area at the back. And so what has happened is that there's a need for that whole house to be presentable. You have an EV charger in the garage. You have all of these bedrooms that you retain or remain open, the doors of which, so that people can see. You have fancy pillows, or 6 of them Bernard talks about. Everything is there to please the guest, to impress the guest, down to the kitchen. What you want, that marble stone bench top. You have a butler's kitchen where all the actual cooking happens. The real kitchen is just for show, so to speak. The house has transformed from what it used to be to what is in demand now. And you just notice the land, okay? The land, even though in this picture it looks bigger, is actually on average across Australia about 500 to 600 square meters. So what has happened is that the land content has reduced in terms of demand to just 500 or 600, and the build or the built up area is higher spec. Now, I'm not saying that you should buy properties with low land content and, overcapitalize on the build. But what I am saying is this trend will continue as per the demographic projections. And so if you can buy a piece of land or buy a site, a property like this, a 20, 30, 40, 50-year-old property that's still in good nick, good bones, then you can establish amazing value on that property, because in the future, someone's going to want this 1,000 meters land and they're going to subdivide it and entertain this sort of concept, which will be in demand. So land always rises in value. It's buildings that depreciate. What we want is the land of one of these old houses so that we can build two of these houses. Now, just to light the fire a little bit and create more of a burning platform, what you see in this chart is the loss of faith in institutions creating a demand for authenticity. This chart shows the amount of people, the voting public, that have voted for non-major parties in Australia. Okay, and when people vote for non-major parties, i.e. not the Liberals and not Labor, that shows that they're discontent with the current economic, social and political frameworks that they're being oppressed or contained or influenced by. Okay, so a lot of this discontentment was for obvious reasons around World War I, the Great Depression. Obviously, no one's got a job, everyone's unhappy, and World War II. And then you had this massive prosperous period, not just in Australia, like from 1950 to about 1980, not just in Australia, but in UK and the US and other basically advanced Western nations. But just like the US, what you're seeing in Australia is a clear trend where people are becoming more and more disillusioned by the system in which they're working, the 9 to 9, where they're working 5 days or 6 days a week just to enjoy 1 day a week. They're going to work for 11 hours a day to enjoy 1 hour a day. No one's happy with that anymore. The inequality is rising. The tension of disparity between the haves and have-nots is increasing. The friction between different opinions is rising. And so what does all this mean for property investors? Well, it's a long bow, and I'm not an expert at this, but it just, for me, in my own mind, shows that no one else is going to take care of you except you. The government doesn't care about you. Your employer thinks you're just a statistic. Maybe even your extended family and friends, they're not going to be there when you really need it. In this postmodern world, you are your best friend and you are your best family member. So take care of your own finances for yourself, by yourself. No one cares about you, I can say financially at least, as much as you care about yourself. Not even me, right? Like, no one is a saint that's just going around being charitable to other people. So in this kind of political or zeitgeist that we're experiencing in the world, in Australia right now, there's an even more need to take control of your finances, because in 10 years' time, there's no one else to blame but you. In 20 years' time, if you're not happy in your financial environment, there's no one to blame except you. Guys, hopefully that was valuable. Like I said, that was all from Bernard Salt, and you're probably the first people who are looking at these slides because they're formerly just for private banking clients. I hope that you're able to action this. You may or may not disagree with a bunch of stuff I said. A lot of this is subjective, but the core moral of the story is that property will continue to be prosperous over the next 10 to 20 years, although you need to be selective and careful how you invest it. And I think the other moral of the story was that you really need to take control of your finances. If you want to do that, you can level up completely for free. Here's the plug, right? I'll leave links below to my Facebook community with more than 30,000 amazing members. They are Australian Property Mastery with PK, and also my podcast on Spotify, Google, and iTunes, Australian Property Mastery with PK. I'll leave links below, and really utilize that content, right, to up level. And don't let anyone take control of your finances, because no one cares about them as much as you. Hit subscribe, hit the like button. I'll see you next time. See you later, guys.